All right, let's talk about something that kind of makes most of us sweat a little: tax brackets. I know. It's a topic that feels overwhelmingly complex. But what if I told you we could understand it all with a simple story about a monkey? Okay, let's just dive right in. Have you ever looked at your paycheck and just thought, what is even happening here? The whole system can feel completely, well, bananas. Trust me, you are not alone. It's a common puzzle figuring out where your money is going and why. And at the very heart of all that confusion is this one big, nagging fear that if you get a raise and move up a tax bracket, bam, the government just swoops in and takes a huge new percentage from all of your money. But is that actually how it works? Spoiler alert, nope. To really wrap our heads around this, we're going to forget all about spreadsheets and tax codes for a minute. Seriously, just put them aside. Instead, we're going to tell a little story. And it's time for you to meet the star of our show, the Revenue Capuchin. So, I want you to completely reframe how you think about this. Forget about dollars, pounds, euros. For the next few minutes, you're a monkey. And that income you work so hard for, it's not money anymore. It's a big pile of shiny stones you've collected. And the tax man, the IRS, HMRC, whoever it is in your country, well, in our story, that's the Revenue Capuchin. He's not some big, scary monster. He's just here to collect his share of the stones, all according to the rules of the jungle. Now, here's where it gets really, really interesting. The Revenue Capuchin doesn't just wander over and grab a random handful of your stones. No. He has a very specific system. He sorts your stones into different piles, and each pile gets treated differently. And you've probably guessed it, these piles, they're your tax brackets. And this brings us to rule number one, and maybe the most important rule of the entire game. The Capuchin looks at your first pile of stones, your first 10,000, and he doesn't touch a single one. That's right, they are 100% yours, tax-free. So here's how the whole system builds up. He leaves those first 10,000 stones completely alone, right? Then he moves to the next pile of stones, and from that pile, he takes a small percentage. Then he moves to the pile above that and takes a slightly bigger percentage. And here is the absolute key. It's only the stones sitting at the very, very top of your collection that get taxed at that highest rate. This just nails the entire concept. The source material puts it perfectly. Listen to this. Monkey isn't taxed 22% on all his stones. I mean, that one sentence right there, that's the key to busting this whole myth wide open. Let's put this side by side just to make it crystal clear. The wrong way to think about it, the way we all secretly fear, is that if you earn 50,000 stones and land in the 22% bracket, your entire 50,000 pile gets hit with a 22% tax. That's not it. The right way, the real way, is understanding that only the portion of your stones that actually falls into that top 22% pile get taxed at that rate. Everything below it is taxed at its own lower rate or not at all. Okay, so now that you get how the piles work, what if I told you our clever little monkey has another trick up his sleeve? A totally legal way to protect even more of his stones. This is where something called the harness deduction comes into play. So what on earth is a deduction? Well, in our story, it's pretty simple. It's a legitimate, work-related expense. Think of it like a tool our monkey absolutely needs to do his job of collecting stones. By telling the Revenue Capuchin about this tool, it actually lowers the total number of stones that he has to pay tax on in the first place. And this is a perfect example of how it works. Let's say our monkey needs a new climbing harness to safely gather those stones from high branches. It's essential for his job, right? Well, the cost of that harness gets subtracted from his total pile of stones before the Capuchin even starts sorting them. And what's the result? A smaller taxable pile, which means our monkey gets to keep more of his own hard-earned stones. Simple as that. Okay, let's bring it back from the jungle for a second. Why are we even talking about all this monkey business? Why does it matter to you and your actual real-world money? Well, because this simple little story, it is exactly how our real tax system is designed to work. You see, the whole point of this system, of these piles or brackets, is to be fair. It's designed so that as your earnings go up, your tax goes up, but gradually. It's meant to be a steady climb, a gentle slope, not some terrifying cliff you suddenly fall off of just because you got a pay raise. So if you remember nothing else from this explainer, please let it be these three things. Number one, you are never, ever taxed at one single rate on all of your income. Number two, earning more money is always a good thing. You will always take home more cash.
And number three, those legitimate work expenses, your own personal climbing harnesses, are your friend. They can reduce the amount of income you have to pay tax on.
So now that you understand the logic behind tax brackets, the whole system probably seems a lot less intimidating, right? It's not some big, scary mystery. It's just a set of rules, like any other game. And once you know the rules, you can navigate it a lot better. Which really makes you wonder, what other financial puzzles out there seem impossibly complicated, but are actually just waiting to be explained this simply?